Should be able to see my screen. Just move that out the way up there. There we go. Get rid of that. I've moved over onto the US indices, and this is the global workspace, if you will. I've got the YM at the top left, NQ, and the ES. So we've got the Dow, the Nasdaq, and the S&P 500 basically on the futures contracts, and down the bottom here, this is on the daily. So top line is 5 minute, bottom line is daily. Over on the other screen, I have the VIX. In fact, let me just pull this up over. It's going to go a bit funny because it's a different, hopefully there we go. Different resolution screen. Basically, this is the VIX. This is on 10 minute. That's on 10. Let's just change that to, let's change that to 2 minute. Oops, wrong one, sorry. That's on 2, that's on 5. Oh, it's on 10 minutes, sorry, I beg your pardon, I was on the wrong time. There we go. So basically, we've got the 2 minutes, the 5 minute, the 10 minutes, down the bottom here, 15, 20, and over to the daily. And the curious thing about the VIX is that, and this is really what highlights everything at the moment, we talk a lot about the relational aspect of market behavior, and it's part and parcel of a core program in the Forex program. But these relationships do break down from time to time, not for long periods, certainly not in terms of the VIX. But it does fall out of balance, and we've seen it time and time again over the last 2, 3, 4 weeks. We've seen a breakdown in terms of yen, where normally where it's risk on, you would expect to see a yen selling, and we haven't seen that. We've seen yen buying, which is an anomaly. We also had an extreme example. I think it was last week. We highlighted it in the trader chat room, where the VIX was actually rising in tandem with indices. It was mid-afternoon from memory, and a couple of hours later, the indices absolutely crashed. And that was signaled by the VIX because it was out of kilter. And the same is also true longer term. If you look at where we are right now, down here on the daily, the VIX is still trading around this figure of 27, 28, where it's been for an awful long time. It doesn't seem to matter how strong the recovery is. The VIX is not following suit. It's waterlogged in this region. It is not going back down to 20. It's certainly not going back down to 10. It's just staying here. And that tells you an awful lot about this recovery from the perspective of the VIX. What we're seeing from an intraday perspective, at any rate, there's an awful lot of oscillation. There's an awful lot of up-down price action at the moment. The VIX is falling. So we've got some upside momentum. We'll just move that out the way, chuck that back over on that screen. There's low liquidity. Well, what we're seeing right now, and this is yet another anomaly, we are seeing days where the YM is moving in one direction and the NQ is moving in the opposite direction against what is happening on either side of it in terms of ES and YM. We've seen that a lot. We've seen a lot of progress to the upside where that has not followed suit in terms of the intraday price action on either of the two principal indices. And we've also seen the inverse of that, where we've had an up day here and we've had down days on the NQ. So in other words, the ES and the YM are trying to rally, and then the NQ is going in the opposite direction. Today, we've got similar sort of price action where we are to the downside. So we've got down candles on all three. But from an intraday perspective, if you look up at the 5 minute, what we've got going on right now is we've got the NQ rising, trying to rally. The YM is looking very weak. If I pop that up, I mean, look at the volume here. We've got, a market that's trying to rally on this sort of volume. I don't think so. And that's where we are right now. It's this contradiction, and it makes trading these futures very tricky, because normally and I use the word normal in inverted commas, under normal circumstances, you expect to see these generally trading certainly in the same direction at any rate, perhaps not necessarily with the same degree of momentum, but certainly in the same direction. You do not expect to see this sort of contradiction we've got going on right now. I mean, you can see it on the trend monitor. The trend monitor has transitioned. It's given you a nice trade. We've gone from bearish, we've gone into darker red. We haven't bothered with going into darker blue. We've gone straight through into bright blue. And you know the trend is continuing. In terms of the trend monitor over here, it's still bearish. Trend monitor over here is very choppy. It's trying to, it's just oscillating around the volume point of control. We've also got the volume point of control here in evidence, and clearly we have it here also. So there's an awful lot of congestion. And you can see here the strength on the NQ. Let's just pop that one up full size, get a better idea on that. You know, the volume's not great on this either. It's okay. Yeah, it's a widespread candle, but the volume is hardly dynamic, driving that higher. It's sufficient, but it's not particularly strong. In terms of trading this, really at the moment, I'm just keeping an eye on what's going on in terms of the VIX. That's kind of come to a halt. It was moving to the downside. It's come to pull it over. Apologies, you have to watch it squash down and re-emerge. It was falling. It's come to, you've got a little hammer candle there, no volume on this chart, but you've got a hammer candle there, so it's symptomatic of potential support coming into play. So possibly we're moving into a congestion phase there on the fast time frame. Just move that out of the way again. And that's where we are. So in terms of, and obviously down the left here, I've got time and sales. And the numbers you're looking for there is not some, you're obviously looking to pick off these larger numbers, double-digit numbers going through, certainly above 20 and 30 into those sort of bigger blocks. What you're looking for there is not per se the fact that it's a big order, it's how the market reacts and what the volume associated with that particular price action is. In other words, if you get a big block of sell orders through here, has that actually resulted in the market selling off? If not, it means there's a lot of buyers in the market. But if you see a large buy order come through and the market isn't reacting higher, then clearly it's weak. So that is the context where you're looking at the time and sales window in terms of the blocks. You're not interested in these ones and twos. You know, with the greatest respect, that's all that us, you know, retail traders pumping our orders in. You're looking for the big sort of numbers, 30, 40, 50 blocks going through in one hit. They are, not only are they going to move the market, but they're also going to signal whether that market is strong enough, reacts to that price block or does not. It's as simple as that. So this is what we've got going on right now. We've got this contradiction in terms across the time frame. So if we head over to, let's go head on to one where we've got all the time frames up. There we go. There we are. Right, I've got the ES up here, but it could be any. In fact, let's put the NQ on. Let's just change that over. Because of the three, the NQ is likely to be the one that has some momentum of any of them. Just reload there. Reload that one. Reload that one. There we go. It's not loading up. I don't know why not. Let's just try that one again. No, doesn't want to know at the moment. Okay. Let's go to 30 seconds. Oh, not 30 minutes, sorry. Let's go 30 seconds. There we go. There we go. That's it. Now let's go back to 15. And there we are. 15 seconds is a time frame I use a lot. I happen to like using it because it gives a heads up as to what is coming up at the very fast time frames. If in these sorts of markets, and I've said it many times before, if you have to trade, if you are comfortable trading as a scalping trader, it's perfectly fine, but you have to go down to these very fast time frames because trading in amongst this is difficult. You can't stay on here for minutes. You're in and out literally every few seconds. You might stay in at the longest, perhaps 30 seconds or so. You're literally scalping, getting in, getting out, getting in, getting out. Doesn't suit everybody. Some traders love it, some don't. You have to find what suits you and what fits your personality, which is why we always advise all our students to start with the psychology module in the Forex program, because then you will understand what is like to work for you, what you're comfortable doing, and what you're uncomfortable doing, which is more important. Just pop this up. You can see we've got a bit of weakness there. We had a wick to that upper candle. Might not be able to see it here, but you can. I'm assure you it's there. There's a wick there. Decent volume under there. A little bit of weakness on that particular candle. See if it's going to break through there. If it is, Then you go up on, let's go up onto the 3 minutes, see what's going on there, what we've got ahead. We've got an awful lot of volume here. There's a lot of congestion in terms of volume. If this is going to break to the upside, there's a lot of volume in the way. And for this market to move higher, then clearly it's going to have some volume down here to drive it through this volume wedge, which is acting as resistance. You can think of it in exactly the same way as price-based resistance. These are on the accumulation distribution indicator from a price-based perspective. In other words, they're looking at the number of times a price has bounced off those regions and the line has thickened accordingly. So this level here has only been tested once. It's a minor level. This is slightly stronger. It's been tested a couple of times. This is very strong. It's been breached. This has been tested 6 times and is now acting as a support platform for any retracement. So moving up here in terms of price, there's very little in terms of resistance to worry us, except this one might slightly higher up. But in terms of volume, there's an enormous wedge of volume here, which is acting as resistance to this move. If the price is going to move through there, it's got to do so with volume. And at the moment, it's struggling. And it's exactly the same. You go down onto the 15-second. Principles of volume price analysis are exactly the same. Look at the spike in volume down here. Big volume. And what is that telling you? It's telling you that at that particular point, that was selling. The operators, the big market operators, the market makers, whatever type of chart you're looking at, that is selling by the insiders. They're dumping in there. That's a market that's weak. Now, ultimately, it may well rally and get through this region. We're trading around the volume point of control. We've got some decent volume above. We've got a resistance platform, that blue line, which is flicking up and down there because it's being tested and retested the whole time, is acting as a potential strength or weakness, depending on where it settles. This is a fast chart. It's now acting as a platform of support, so it's pretty strong. It's being tested again. And that's how they move up and down the whole time. It's constantly calculating and recalculating those levels for you. Obviously, on a 15-second time frame, it's very, very fast. But the same principle applies over on a 1 minute, 3 minute, a 5 minute, 10 minute, and so on and so forth. And that's what we're seeing. We're just seeing congestion. Just see what the VIX is doing. It's kind of moving sideways, so it's what we expect to see. Now we're starting to see a little bit of a move away from the volume point of control. This is now acting as resistance overhead. And the same principles apply. If this market is going to break to the downside, then it's got to do so on volume. We've had a bit of a rise in volume there, so we've had some selling coming in on these two. But if we're going to break through this volume wedge below, again, it takes effort because a market takes effort. We all understand the principles of gravity. It takes effort to rise, but equally, it takes as much effort to fall. So if you see a market falling on falling volume, as we did, I think, going right back to the pound CAD example, which Anna started with, where you had 3 candles or 3 or 4 candles in a falling price move, but the volume was falling in tandem, then what that's telling you loud and clear is that that is an anomaly, and therefore it's not going to continue. And if that happens in terms of a trend higher and you're seeing a trend lower, then that's telling you loud and clear it's a secondary trend. In other words, it's not going to break the primary, it's just a temporary pullback. And that's the power of volume price analysis used in that way. It's a key part of the program. Say we teach that, it's one of the key elements. Understanding primary and secondary is probably more important than anything else because it will help to keep you in trades and maximize whatever is available rather than you jumping out too early, which is what most traders do, and which is why most traders never move forward in terms of trading accounts because they're constantly getting out too early. We've had a big spike in volume. Sorry, just to move forward very quickly. Big spike in volume, lots of selling coming in, volatility trigger, trading inside that one at the moment. Got past this one, trading inside that one. What are we expecting to see? We're trying to break through this this wedge of volume here. See what the next candle does. Okay, trying to rally, half decent volume on that one, but not terribly strong. See if we get a 2-bar reversal on it. Okay. Decent volume under that, so the selling pressure's good, buying pressure's weak, selling pressure's strong, reversal, down we go. Trend monitors transition to red, coming down into some low volume. So all things being equal, you know, if the volume continues, tiny little candle there, if the volume continues, we'll go straight through there and on down to the next level. Got some support building here below. We've got a level that's been tested twice and held. We've got another one below it here at 2. This is all pretty quick stuff, but you know, the principles are exactly the same. And then of course you're looking at different time frames. So you'd move up to your 1 minute chart. You know, what's your 1 minute chart telling you? Volatility trigger, expect to trade inside the volatility. That's what we're seeing. Trend monitor is starting to transition. You can see it here into darker red. Nothing on 3 for the time being, wouldn't expect it. Up to 5, let's see what we've got on 5. Doesn't tell you a great deal at the moment other than where it's likely to head back to, which is the volume point of control here. So if you're looking at this as a downside move, you know, there's maybe 7 or 8 points here. We're on the NQ, so that may be enough for you. If we're on the YM, it certainly wouldn't be. But in terms of an NQ move, that might be enough. So again, it's looking at the chart and trying to decide, where is this move going? What's in the way? What's going to cause it to pause? What's going to cause it to stop? Where is it likely to be heading to? And first port of call is probably going to be down here where you like to get more congestion. So if you're going to jump on here as a scalping trader, you need to have that information. Effort to rally, long-legged doji, indecision, effort to rally, looking pretty weak at the moment. Down onto 10 minutes, very slow in terms of what we're doing now. Weakness there, you know, it's not looking strong, is it? Now we've got the VIX, which is starting to turn up. Let's just pull the VIX over, get my cursor over there. Pop that up. There we are, you can start to see the VIX now turning up. We have this hammer, congestion, and now we're starting to see that reverse. That's on 2, it's on 5, over to 10, and that's on the daily where we're still stuck in this congestion zone where we've been for a long time. But from an intraday perspective, you know, keep an eye on the VIX. That tells you what's going to happen next. Volume will confirm everything for you. There we are. Can I pass? Yeah, no problem. Let's pop that down. Just keep an eye over here on the time and sales window. You're looking for any big blocks that are going through there. Nothing at the moment. Okay, where's this move going back to? Probably back to the volume point of control there. Let's see if it goes straight through or it's going to pause there. Let's hit that, hit the level. No surprise. Got a very strong level coming into play here now. This has been tested 7 times. So that's a very strong region, which is going to act as resistance, clearly. Trend monitor is now reversed and come out into bullish again. Volume's falling away. Lack of participation. See what we can see on the 1 minute. Telling us a great deal. We had the volatility candle. We expect congestion or reversal. We've got congestion, and we're now getting the reversal off that. So a lot of traders will have jumped in on that, hoping to make a quick buck, nice and easy, and then now they're trapped, and now they're getting squeezed, and they've probably been stopped out, and they're regretting the decision to jump in. It's all to do with the fear of missing out. That's why the volatility works. It's powerful, it's used in all time frames, and it makes money for the market makers like no tomorrow. But if you have the volatility indicator, it tells you instantly that it's there, and it's always associated with participation and the market makers. The two go hand in hand. Very choppy, coming back down onto the VPOC again, which is actually underneath this platform now. It's popped up a little bit. Very strong platform of support in place at 68. Very strong. It's been tested 10 times now. Extremely strong level. I wouldn't be trading any of this at the moment. It's far too choppy. There's far too much indecision. There's far too much variance. It's not something to trade at the moment. Certainly, I wouldn't be trading it. Others might. I wouldn't. There's too much risk. Far too much risk. I like trading big days where you've got good moves, good momentum, and then you're in and out, but at least you're trading with momentum. We're not trading with momentum at all at the moment. And unless Donald says something or someone releases something about a virus or something, vaccine news, something of that nature, this is where we sat for the time being. This morning was fine. It was relatively steady, but as soon as we've gone into the cash markets with Globex, it's gone into its shell. Just going to switch off for a moment.